September 15th morning, while the world slept, a 150-year-old financial empire quietly filed for bankruptcy, and nothing was ever the same again. Most people remember 2008 as the year the economy collapsed, the year housing prices crashed, banks stopped lending, and millions of families lost everything they had worked their entire lives to build. But very few people know the full story of how it started, of who was responsible, of the one decision made in a single weekend that turned a financial crisis into a global catastrophe. This is the story of Lehman Brothers and the night it took the world down with it. Here's something almost nobody knows. Lehman Brothers didn't start on Wall Street. It started in a cotton field in Alabama. In 1844, a German immigrant named Henry Lehman arrived in Montgomery, Alabama. He opened a small dry goods store. A few years later, his brothers Emmanuel and Meyer joined him, and the three of them made a simple observation. Their customers, mostly cotton farmers, didn't always have cash, but they had cotton. So the Lehman brothers started accepting cotton as payment and then trading it and then financing it. Within a decade, they weren't running a dry goods store. They were running a commodities trading operation. They moved to New York, then to Wall Street. For over a century, they survived everything: the Civil War, the Panic of 1927, the Great Depression, two World Wars, the dot-com crash. By 2008, Lehman Brothers had 28,000 employees worldwide and $619 billion in assets. It was the fourth largest investment bank in the United States. It was considered untouchable. But somewhere along the way, Lehman had made a bet, a massive bet, on something that seemed completely safe: American homes. In the early 2000s, Wall Street had discovered something extraordinary: mortgages, not just regular mortgages, subprime mortgages, loans given to people who couldn't really afford them. Banks would bundle thousands of these risky loans together, slice them up, and sell them as investment products. They called them mortgage-backed securities, and everyone bought them, because the ratings agencies the companies paid to tell investors how safe things were gave them the highest possible ratings. AAA, the gold standard, as safe as US government bonds. Lehman went further than almost anyone. CEO Richard Fuld doubled down on real estate, then doubled down again. By 2007, Lehman had borrowed $30 for every loan it actually owned, 30 to 1 leverage. Meaning, if the value of its assets fell by just 3%, the entire firm would be wiped out. And in 2007, American home prices started falling, not by 3%, by 30, by 40. In some markets, by 60. The mortgage-backed securities Lehman had built its empire on were worthless, and Lehman had nowhere to hide. On the weekend of September 13th and 14th, Tea Fanties, two most powerful people in American finance, gathered in one room and made a decision that would change history. Treasury Secretary Henry Paulson, Federal Reserve Chairman Timothy Geithner, the CEOs of every major Wall Street bank. They all knew what was coming. Lehman Brothers was going to collapse. The question was, would the government save it? 6 months earlier, they had saved Bear Stearns, another failing investment bank, by arranging a sale to JP Morgan Chase backed by government guarantees. But this time, Paulson said no. No bailout, no government money, no guarantees. The banks had to find a private buyer. Bank of America walked away, choosing to buy Merrill Lynch instead. Barclays from Britain was interested, but British regulators blocked the deal at the last minute. By Sunday night, every option had failed. At 1:45 a.m. on Monday, September 15, 2008, Lehman Brothers filed for Chapter 11 bankruptcy protection. 6 News Street billion in debt, the largest bankruptcy in American history by a distance. When markets opened that Monday morning, the reaction was immediate. The Dow Jones fell 500 points in a single day, its worst drop since September 11, 2001. Credit markets froze. Banks stopped lending to each other, because if Lehman could fail, anyone could fail, and no one knew who was next. Within days, the US government had to rescue AIG, the world's largest insurance company, with an $85 billion emergency bailout. Within weeks, Congress had passed a $700 billion rescue package for the entire financial system. Within 6 months, the stock market had lost more than half its value. 8 million Americans lost their jobs. Millions of families lost their homes. A generation of retirement savings evaporated. All of it traced back to one morning, one bankruptcy filing. One bet on American real estate that went catastrophically wrong. Lehman Brothers survived 150 years, 2 world wars, the Great Depression, every financial crisis in modern history, and it was destroyed in a single weekend by the same thing that has destroyed every empire before it: greed, leverage, and the absolute certainty that this time was different. It never is. Subscribe to Empire Collapse because the next Lehman is already out there.